It's definitely been some time since we were talking about gold at all-time highs. Back in August of last year, the price has just continued to edge lower, and at the time we're recording today, it's doing the same again, back below $1,700 an ounce. But are we finally getting to a point where the tide is going to turn for gold and we're going to see the buyers come back in? It's definitely been an interesting 12 months for gold. If we go back just over a year ago, the price was down at $1,450 an ounce. Then we saw that run up that really accelerated through June and July, hitting those all-time highs, $2,075 an ounce in early August. And since then, even though on the way down we have seen the odd strong rally like this one back in December into the new year, they've all proved to be unsustainable. So buyers of dips have had their fingers burnt. The price is down almost 20% from those all-time highs. But what next for gold? I do think there's an opportunity. It's a difficult one for me to take at the moment because the trend since August last year is still down. But I am wondering if this old zone from April through to June last year ends up being something of a block to any further weakness on the downside. So as usual in this video, I'll talk a bit about what's been going on with gold over the last few weeks, what to watch out for during April. There's a really obvious one that's driving gold lower at the moment. Then we'll come back onto this and look at it in more detail. And I'm going to do a trade. I'm going to set the trade up. Hello, I'm David Jones from Capital.com, and I thought we'd do an update for gold going into April to see what the next few weeks might hold. For the yellow metal, that is still under pressure, but more of that in a second. So as usual in this video, I'll talk about what's been driving it recently, what we might have to watch out for in the months to come. Then we'll jump on the platform and see if there's a trade to do. I do think there's a trade here. I think it's quite an aggressive trade considering which way the market has been going since August last year, but more of that when we jump on the platform. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it helps support the channel and it means we can continue pushing out lots of different content during the week on all the different markets we look at. Okay, let's get into gold and see what we can expect over the next few weeks. So just as a reminder, it does seem a long time ago now, but August 2020, last summer, we saw the price of gold hit fresh all-time highs. So the price traded up to $2,075 an ounce. We saw really strong performance during July, hitting those all-time highs in August, blasting through the previous all-time high. But since then, we have had a distinct lack of momentum. We've seen the price under pressure. We see the gold price stage the odd rally now and again, but they run out of steam. They've been running out of steam since August, and the price of gold moves lower. So at the moment, if you look at the chart of gold, we're off about 18% or so from those August highs, which is a sizable slide in, what is it, about seven or 8 months or so. So we are still technically in a correction for gold, but the long-term trend for the last couple of years, 2.5 years, is still up. What's putting pressure on gold? I always talk about this, but what's happening with the US dollar this year? At the time of recording, the dollar index, which you can look at on our platform, the code is DXY. It's the dollar against a basket of different currencies. It's at a 4-month high. So normally, if we see the dollar rise, we'll see assets such as gold lose pace. And I think this is what we're seeing at the moment. It's what we've been seeing for all of this year. We're seeing this dollar strength. So clearly the risk here, if we see further dollar strength into April and further into 2021, we're going to see the gold price under more pressure. There are concerns about inflation. We've seen some volatility in stock markets over the last couple of months, worried that inflation is going to be an issue a bit further down the line. The classic way of combating inflation is to raise interest rates. This is one of the things that's making the US dollar attractive. It could still help gold. Gold has been viewed as a hedge against inflation. So if we do see inflation becoming a problem, it could well be one of the factors that turns this short to medium term sentiment round for gold. But at the moment, other assets are proving more attractive. We've got the US dollar, we've got stock markets, despite the volatility, still pushing higher. So I think people are continuing to turn their back on the price of gold, and it's still under pressure. But like I say, I think there's an opportunity here. It's an aggressive trade. It's a lot more aggressive than the ones I'd normally do. Let's have a look at the levels, then we'll jump back onto the platform. So on the upside, the immediate hurdle is $1,760 an ounce. That was the high beginning of March. It's a fairly short-term level, but it's also the high where the rally recently ran out of steam in the last few days or so. I think the rally ran out of steam at 1755, so it's having a real problem with these levels. But why it's interesting on the downside, the low so far this year, 1675 from the 8th of March. But then if we go back and look at a bigger low, 1,670, just $5 below the low that we've seen this year. And we've got to go back to last summer to see that level. So I think if gold is going to turn around anywhere, then we're here. And that's really my idea for the trade. So let's jump on the platform and see what we can do. As this is a gold video, we have to start, of course, with a long-term trend for gold. So back to August 2018. We've been following this all the way, the last couple of years, really, for as long as we've been doing gold videos. It's been a great trend, this one. You know, it came close to it again in March of last year. Then it's accelerated away up to those all-time highs. That trend line seemed an awfully long way away back then and not too relevant. But at the time of recording, the price of gold is only about $140 above that trend line, coming in at 1550. So it is really interesting. We have conflicting trends at the moment. So we've got, you know, this correction going on from the highs. Okay, that the line has only been touched a couple of times, and for it to be a textbook trend, we could do with 3 touches on that. But it's still weak for now. I still think there's an opportunity though. Let's have a quick look at the indicators. Then we'll take a look at things in more detail and see if we can get the trade set up. So RSI, first of all, at the time of recording, with the price of gold getting knocked back, we're seeing the RSI dipping below oversold. The last time we were down here, it wasn't that long ago. It was only the beginning of March. It did mark something of a short-term bottom for the price of gold. Perhaps we will see some sort of stability come back in again as it's moved sort of below $1,700. But it does show, I think, how weak it is at the moment that twice in a month the RSI is going back into oversold for gold. It just cannot hang on to any rallies. I wouldn't read too much into it at the moment. If we get bullish divergence or something like that, it starts to look a bit more interesting. But as we know, in strong trending markets, and we've got a weak price the last couple of days, RSIs will move to an extreme pretty quickly. If we take a look at the MACD, slightly different picture from the MACD. We had a buy signal back in mid-March, again as it moved back above $1,700 an ounce. At the time of recording, because of the weakness we're seeing now, the MACD is hooking over, giving us a sell signal again here as the price is losing momentum and falling. So perhaps we are going to see those lows for the year so far, down at 1676, get taken out by this current weakness in the price. Which brings me to the trading idea. If you've watched any of our videos, you know that I'm a big fan of price action, support, resistance, trends, rather than just indicators. You know, I think the purest thing we can look at is the price. Undoubtedly, at the moment, the price of gold is weak. It's been sliding since those all-time highs. Rallies just can't find any traction. But for me, going short here is a problem. I do think there's a risk those lows are going to get taken out and we're going to slip to new lows for the year and the lowest price since June of last year. So if I was going short at the moment, the closest I'd want my stop is above those mid-March highs, the other side of 1755, 1760, that sort of area. But I'm also a little reluctant to go short into this current weakness because we have this zone coming up. When we saw gold get pushed down in March of last year, along with everything else, as investors deserted just about everything and fled to the US dollar. We saw the US dollar jump sharply in March last year as the coronavirus pandemic spread and everyone was looking for a safe haven. When we saw it bounce back off those lows, we had good support at 1560 on the way up. Then this whole zone through April from about 1640 through to the June low at 1670 before it really took off. So we've got a big area of support running from 1640 through to 1670, which is why I say if the price is going to turn around anywhere, then we're here. You know, a little over a year ago, investors, traders viewed that area as a good zone to buy. And I'm just wondering, is the same going to happen again? The better way of trading this is to sit and watch it, you know, to see how the price performs over the next week or so. Do we see some strength come in ahead of this zone? But, you know, we do gold videos perhaps a couple of times a month, so I don't want to potentially miss out on the turn. But that's why the trade I'm going to do now is a bit more aggressive than the normal trades we do. So what I'm going to do, I'm going to buy. I'm going to put an order in to buy. I think there's a risk we could well take out those previous lows at 1676. We're only $12 away at the moment. I want to give the market time to prove me right. I've talked about this zone of support back here. So I'm going to look to be a buyer at 1675, pretty much on the low for the year. If it does get better, knock back down to there. And then I'm going to put my stop in. And I'm going to put my stop the other side of this, I think what we could call this congestion zone in gold. Because I think if we do lose 1640, let's say, as the last level of support, I think the risk is it's going to go back towards 1500. So I think this is almost the last chance for a bounce in gold before the risk of a much deeper slide. So when it comes to a stop loss, I'm going to buy her at 1675. I'm going to make it easy for myself, put a stop loss $50 away, 1625. So the other side of that congestion zone. And really, I'm looking to see if this longer term trend starts to resolve itself and we see some buyers come back in ahead of this trend line. Let's set the trade up. So I'm a buyer of 7 ounces. The price is currently about 1688, 1689, that sort of level. I want to buy if it drops to 1675. So if we see it push back to the lows for the year, I want to be a buyer. If that order gets filled, put a stop loss in at 1625. So it's only $50 away. I think that's a relatively tight stop, considering, you know, it's moved about $60 or $70 down from those mid-March highs. That's it. I'm ready to go. Let's place the order. So my order's in, buying 7 of gold at 1675. You can see my order sitting there on the chart, the limit order, just a nudge under those lows. So I don't think gold is going to go racing away higher anytime soon. You know, we do still have this correction in place. I'm just speculating that perhaps this area that before the real surge last year, where we did see a bit more to and fro between buyers and sellers, that perhaps it becomes attractive once again. But if it slips through, I'll end up getting filled. But if it carries on falling, I'll be stopped out for the usual manageable loss. So I think it's a really interesting market to watch over the next few weeks into April. I think the better trade is to be patient and watch and see if we do get some sort of stability. I don't have that luxury, but I thought, well, let's put an order in anyway. It makes it interesting. I've got a stop loss on. Let's see if it can build a base down here. My first target, if I got filled, would be a run back up to the 1760 area. At that point, I'll probably be looking to move my stop to break even and see if it can finally stage a more meaningful recovery into the 1800s. So I think, you know, given the dollar strength at the moment, it's going to be a really interesting month for gold, but we are somewhat at a bounce or bust area down at these levels. So we'll see what April brings. Further pressure for gold, or finally a bounce and some sort of sustainable rally off this major historical support. We'll come back and update it in the weeks ahead. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.